Now let's move into step 2. This is where we start building the real financial picture, income and expenses. And I want to set the tone right away because this is where most people slow down or get uncomfortable. That's normal. Most people don't have a clear view of their numbers. They have a general sense, but not a structured breakdown. That's exactly why we're doing this. Let's start with income. What's coming in? Wages, business income, distributions, side work, anything that generates cash flow. And here's the standard you need to understand. The IRS defines income very broadly, from whatever source derived. That means everything, not just what shows up on a W-2 or a 1099. Cash, side jobs, transfers that function like income, anything that increases your ability to pay. So don't filter this. If money is coming in, it belongs here. Now here's the key. We're not looking for perfection. We're looking for a realistic picture. If you have exact numbers, use them. If you don't, estimate based on what you know today. Because from the IRS's perspective, income drives everything. It's the starting point for determining what they believe you can pay. Now let's talk about expenses. This is where people tend to make mistakes. Some people underestimate, others overestimate. Both create problems. What we want here is a reasonable, supportable numbers. Housing, utilities, food, transportation, insurance, other necessary living expenses. And I want to highlight one category that people almost always miss. Taxes, federal income tax, state income tax, and if you're self-employed, self-employment tax. This isn't optional. This is a real ongoing expense, and it takes a significant bite out of your income. If you leave this out, your numbers will be wrong. And if your numbers are wrong, your strategy will be wrong. So make sure you include it. Now again, if you don't know the exact number, make your best estimate and keep moving. You can refine this later. Now here's something important to understand. The IRS has its own standards for what it considers allowable expenses. That means even if your actual expenses are higher, they may not recognize all of them. But that doesn't mean you leave it out. We capture your real numbers first. Then we analyze how the IRS will treat them. That's where strategy comes in. So don't filter yourself. Don't try to guess what the IRS will accept. Just enter the truth as best you can. Because once this section is complete, we now have something powerful. We have your cash flow. We can see what's coming in. We can see what's going out. And we can begin to understand what your real capacity looks like. This is the turning point. You're no longer guessing. You're starting to see your situation clearly. So keep it simple. Answer each question. Move forward. Don't get stuck. We're building momentum, and this is where it starts to come together. Let's keep going.